Have you ever sat on your bed looking at your bank app and just felt stuck? You're ambitious. You've got goals. But somehow, money feels like the missing piece between where you are and where you want to be. And let me tell you something nobody talks about. You don't need a financial advisor. You don't need thousands of dollars. You don't need to time the market or chase the next meme stock. What you need is a system. A plan that works whether you're starting with spare change or six figures. This is that plan. Today, I'm giving you a complete breakdown of how to build a winning investment portfolio on any budget. Because wealth isn't built overnight. It's built on purpose. So let's build it together. Why most people never build wealth. Before we dive into ETFs and asset allocations, I want to start with a story. I once worked with a guy named David, mid-30s, super smart, worked in tech, made six figures, but every time I saw him, he was stressed about money. One day I asked, "David, where's your money going?" He shrugged and said, "I don't know. Rent, food, whatever. I haven't really figured it out yet." No budget, no investments, no plan. And it hit me. David wasn't failing because he lacked money. He was failing because he lacked a framework. That's where most people are. It's not about income. It's about intention. You can earn $40,000 a year and still build wealth if you have the right portfolio strategy. And you can earn $400,000 and stay broke if you don't. So now I'm going to give you that framework. And trust me, it's going to change the way you think about money forever. Step 1. Your portfolio starts with purpose. Let's get real. Before we talk about stocks or crypto, I want you to close your eyes and imagine this. You're 5 years into the future. You wake up. No alarm. No rush to a job you hate. You check your investments and your money. It's been growing while you slept. That future isn't fiction, but it requires one thing: knowing your why. Ask yourself, your why will shape every single decision you make. Take me, for example. When I started, I wasn't trying to get rich. I was trying to never feel financially helpless again. To never stay in a toxic job just because I needed the paycheck. That reason, it kept me focused when the market dropped. It kept me consistent when returns were slow. Your why is your anchor. Write it down. Keep it close. We'll build your strategy around it. Step 2. Know the tools of the trade. Now let's demystify the building blocks of a portfolio. Think of your portfolio like a recipe. Each ingredient plays a role. Some bring flavor, some bring structure. And the mix? That's what creates balance. 1. Stocks, your growth engine. When you buy stocks, you're buying a slice of a company. If that company grows, so does your investment. Example, let's say you bought 10 shares of Apple back in 2010 for $30 each. Today, those shares are worth over $1,300 total, plus dividends. Stocks are volatile. They go up, they go down. But over time, they tend to rise, especially in a diversified basket. This is why I love ETFs, exchange-traded funds. They are like a fruit salad of stocks. One ETF can include hundreds of companies. No need to guess the next Tesla. Just own them all. 2. Bonds. Your safety net bonds are loans. You lend money to a government or a company, and they pay you interest. They don't grow as fast as stocks, but they're more stable. During a market crash, bonds soften the blow. They provide income and stability, especially important as you get older. 3. Cash and equivalents. Your flex fund cash is about liquidity. You can access it fast. It doesn't fluctuate. Things like, you won't earn much, but it's your emergency buffer. 4. Real assets. The inflation fighters, this includes real estate, commodities, even farmland. Why do people love real assets? Because when inflation rises and your dollars lose value, real assets usually hold strong. You can invest through 5. Alternative assets, the wild cards, crypto. NFTs, startups, art collectibles. These are speculative, high risk, high reward. I always say, never invest what you can't afford to lose. But as a small slice of your portfolio, they can offer outsized returns. Just don't build your castle on sand. Build on stone first. Step 3. The power of diversification. Let me tell you about Emily. Emily was 26, just landed her first job, and dumped her entire bonus into one company stock, Peloton. It soared, then crashed. She lost half her investment in 6 months. Diversification would have saved her. Here's how it works. Think of it like a table. One wobbly leg won't topple it because the other legs keep it steady. That's your portfolio. Balance is everything. Step 4. Building portfolios on any budget. Now let's get specific. Here's how to build a winning portfolio, whether you're working with pennies or paychecks. If you have 100, that's instant diversification for the cost of one meal out. If you have 1,000, here's a simple split. You've got growth, stability, and curiosity. If you have 10,000 pounds, time to add and automate it all. Set up monthly auto investments. Treat your portfolio like a subscription. Netflix for your future self. Step 5. Automate, rebalance, and grow. Here's the secret sauce. Systems beat willpower. Set a fixed amount to invest monthly, rain or shine. This is called dollar cost averaging. Buying over time at different prices. Over 20 years, it averages out. And every 6 to 12 months, rebalance. If stocks went wild and now make up 80% of your portfolio, shift some back into bonds or cash. Think of it like steering a ship. Small course corrections keep you headed toward your destination. Step 6. What to do when the market crashes. Let me be brutally honest. The market will crash. And when it does, people panic. They sell at the bottom. They say, investing doesn't work. But the smart money, they keep buying. They see the dip as a discount. Let me remind you of March 2020. Global panic. The S&P 500 dropped 34%, but by the end of 2021, it had not only recovered, it had grown 68% from that low. Those who sold missed the rebound. Those who held or bought prospered. So when fear hits, zoom out. Markets recover. History shows it every time. Step 7. This is bigger than just money. Let me ask you something. What would your life look like if money wasn't a constant worry? If your portfolio covered your rent, your vacations? What if it bought you time with your kids, your art, your ideas? This isn't about greed. This is about freedom. Every dollar you invest is a vote for your future, for your independence, for your power. So stop waiting. You don't need to be an expert. You just need to start. You've got the tools. You've got the roadmap. Now it's your turn to build. Let me know in the comments. What's the first asset you're adding to your portfolio? And if you found this video helpful, share it. Someone out there is looking for this exact message right now. In the next video, we're diving into the most dangerous traps investors fall into and how to bulletproof your portfolio from fear, hype, and FOMO. Subscribe so you don't miss it. I believe in you, and I'll see you in the next one.